In this video, traders, we're going to look at how do FX traders come up with trading ideas. Stay tuned. Hey traders and investors, a very warm welcome to you. So, pretty decent question. How do FX traders come up with ideas? Great question this. Right, let's have a look at it. So the number one is global macro. So the bigger players, the hedge fund guys, the mutual fund guys, the guys swinging around big clips of size will be looking at the bigger picture. In other words, they are looking at the economy. They are looking at things like jobs. They're looking at things like factory orders. They're looking at things of all these kind of different gauges of economic sentiment. They're looking at them. They're seeing when the cycle will change, i.e. are we kind of about to turn around? If we are, is that worth selling some of that currency against a stronger currency? Have we got a new government in place that's got a new strategy for specific things? Is there a war about to break out? These kind of things that might affect the overall value of the economy. The big guys who are managing the big money are looking for those things. So that's how some will make their decisions on the big macro events. Number two, interest rates. So whilst this kind of goes in with the global macro thing, interest rates is a really good way that traders will make decisions because interest rates affect the value of the currency massively. You know, interest rate movements, surprise interest rate movements, interest rate cycles changing. You could use this chart again. Imagine that's interest rate rises and now it's interest rate falls. If they predict, when that's going to change, or perhaps there's going to be an unusual rate rise or something different that's going to fundamentally affect the value of the currency, that will bring in a lot of money. A lot of traders will make a decision based on interest rates. And some are obviously the very, very well funded guys, the guys who are running serious amounts of money, will have models, will have kind of investment models that they will extrapolate out and decide when they think interest rates will start to rise or when they think will fall based on different parameters and different variables that might affect it. Come up with an idea, see if the market has discounted that or not, and then take a trade based on whether they think they're right and the market is wrong, that kind of thing. So that's how a lot of the big players will make their decisions. The number three, or the third one, should I say, is chart pattern. So it's more for your day-to-day retail guys, but still, I know that some of the big players will still look at charts. They'll look at them and say, hey, you know what? We are, rolling over from a high here. We have tried to push through a low, whatever the pattern may be. We might not be as simple as kind of head and shoulders, double tops or whatever, but the point is a chart is still a chart. Now, whether we're using textbook stuff or whether we're looking and seeing it's still a footprint of what's happened with price. And so traders will make decisions and say, hey, you know what? Maybe they're going to put it into the bigger perspective of global macro and look at the chart as well. But from a retail perspective, that's when most traders are making their decisions based on kind of chart patterns, technical analysis, that kind of stuff. So some of the things that's worked, stood the test of time, works more often than not. They can place bets, place trades based on specific kind of patterns, whether it's candlestick, bars, formulas, charts, patterns, whatever, to try to assess and guess and speculate where the future price will go. So more for retail, but don't rule out the fact that some of the big guys use it as well. Number four, unexpected news. This is a big one. This is what brings in some of the big money and makes that supply demand imbalance shift massively. If we have a surprise interest rate announcement, if we have a war, if we have a president who's shot, if we have an unexpected president, if we have unexpected economic event happening that people don't expect to happen, obviously was unexpected, that will create a catalyst and revalue the currency. Think Brexit, think Donald Trump coming in. These things were not expected to happen based on the expectations of the public, of the bookmakers, of the city, of the street, whatever you want to look at. So when unexpected events happen, you get extreme moves in currency. That will bring in FX traders to come up with a trading idea. And the more and the well prepared ones, are the bigger funded, generally the better prepared as well, will have ideas for that. We'll say, okay, if X happens, we will position this way. If that happens, we will position that way. They will know which currency pair to trade the main one against to get their best bang for the buck, their best risk reward ratio trade. Okay, Number 5, similar to chart patterns, but support and resistance. Many traders will make the decisions and say, hey, you know what? We have come up to a level that we haven't hit for multiple years in a row. Now's the time for me to buy this currency. I think it's a good value time to buy. I think it's a good time to sell. They will do it just literally based on support and resistance or key levels or new fresh territory that's not been done for a while. Maybe they'll compare it based to the economy. Maybe they'll just compare it based on how quickly it's risen up, whatever it may be. The point is, standard support and resistance holds true and holds firm whatever size you're trading. You know, maybe you're not going to be able to just put a full clip of big size in just because it hits support, but it's at a key level. You're still interested in the price level, right? You're still saying, okay, let's say you're quite bullish on a specific currency. If it's still not quite a support, you might say, you know what, let's feather the trade. Let's scale into it to that support level and under it. Let's use that as a kind of anchor point and go around it. So traders are still using support and resistance. Of course, retail traders will use support and resistance and chart patterns. These two here are really the retail traders, kind of big decision-making points, support, resistance, and chart patterns. And that's how most guys who are trading smaller accounts are making the decisions. But like I say, the big guys are still looking at support and resistance. Number 6, volatility changes. These are usually caused by catalysts, but very often they're caused maybe by a bounce off support and resistance. Something changes that increases the volatility. Perhaps news is expected. Perhaps something's happening that encourages traders to get involved. Now, you might have the bigger players doing complicated trading strategies like selling options, like doing an option spread, like selling one currency, buying another, doing some sort of complicated thing to capitalize on the volatility change, maybe looking for a compression or an expansion, whatever it may be, or they're just trading directional like you and I would be doing. Regardless, when there's a volatility change, that brings in fresh money. That always brings in fresh money, because money might not even be trading currency. Money goes to where volatility does, especially when it's looking to achieve a decent return. It goes to where there is movement. Yes, I know there's a kind of seesaw event of volatility versus risk, but generally speaking, when something is moving, that encourages a lot of people in, because people want to make money, and volatility can equal money. So there is 6 ways that FX traders come up with trading ideas, whether you're retail, whether you're hedge fund, whether you're a big player who's swinging around a decent amount of size. These are kind of some of the things that people look at to make their trading decisions. All right, guys, take care, keep your risk manager, whatever you do. Thumbs up if you like this kind of stuff, much appreciated. See you in the next one. Take care. Bye-bye.